Hi, how are you? Hope you're doing well. My name is Waceke Nduati of Centonomy Limited. Welcome to this week's vlog. Now, every time you sit with someone, they're talking about the economy. The interest rates have gone up, there's corruption, there's leadership, they're worried about their bank, and so many things. And today I actually wanted to talk about how do we deal with this high interest rate environment? How do we not only survive, but how do we also thrive? First, I want to deal with you as a consumer. You will notice that things in your shopping trolley have probably gotten a bit more expensive. That is because the businesses who had borrowed loans are repaying those loans at a higher amount, and thus your everyday expenses may be slightly more expensive. The exchange rate has fluctuated, so our cost of life is not the same it was 6-8 months ago. Now, what people tend to do most of the time is continue consuming the exact same way and decrease what they were saving. That's absolutely wrong. Do not build someone else's factory at the expense of your own factory. So for example, if you are saving 10,000 shillings per month, just because your expenses have gone up, do not start saving 5,000 shillings a month to spend another 5,000 shillings. What you should do is cut your expenses somewhere. Look for somewhere else to cut your expenses. Look for extra money in your entertainment, your extra money in how you shop, extra money in how you handle your transport, your extra money in how you do your hair. Do not cut your savings or investments as much as possible. You have probably also received a notice from the bank. The interest rates have gone up, so your loan repayment has gone up. So for example, if you had borrowed 1,000,000 shillings for 5 years, your monthly installment has probably gone up to about 27,000 shillings. This means that if you continue paying just the minimum repayment, after 5 years you will have paid about 590,000 shillings in interest. So my advice to you is look for that extra money. Look for where you are spending money badly and put that extra amount into your loan repayment. So for example, if you put an extra 15,000 shillings into your loan repayment every month, the interest you will pay over the period goes down to 307,000 shillings. That's almost half. And not only that, you will finish the loan in 3 years. So there's nothing we can do about the fact that interest rates have gone up, but you can be clever about how you handle your loan. Pay back your loan faster. Let's get out of our comfort zone, people. Now, to you as a lender or an investor, remember, every time you put your money in a bank, in a deposit or in a savings account, you are effectively lending the bank money. That is the money the bank uses to lend to other people, including ourselves. So now be clever with it. You can, instead of putting money in the bank, which is not earning you anything, you can go out and get a treasury bill. Look out for my article on treasury bills that explains everything about it. But right now you can get a treasury bill for over 20%. So for example, if you had 100,000 shillings and invested in treasury bills, you can get 20,000 shillings for doing nothing on an annualized return. So don't keep money lying idle. Make it work for you as fast and as effectively as possible. Do your research. If your bank won't give you the correct interest rate, go and do your research. Call a couple of banks and see what kind of interest rates they are willing to offer you. Of course, do your research on the bank as well, given past experience. Now, apart from that, remember, when interest rates are high, many investors have moved their money to things like treasury bills, fixed deposits, what we call cash investments or money markets. That means things like the stock market prices are depressed because money has moved out, not because the companies in the stock market are bad. So think like an investor. The best time to buy is when prices are depressed. So some of those stocks in the stock exchange, nothing has gone wrong with the business. The companies are still strong fundamentally. They have a good strategy. They've got good management. They've got good past performance. They've got a good future plans. They've got a good market share. Go and do your research, because if you have a long-term vision, you can probably pick up some shares on the stock market that are undervalued, and when things go back to normal and when money moves back to the stock market, the prices will rise. And not just the stock market. We had our property investor in our Centonomy classes recently, and he's saying there's also opportunity in the property market the same way there is opportunity in the stock market. There are businesses out there looking for capital. So if you're an investor that likes investing in businesses, that's an opportunity, because those businesses cannot cannot raise traditional capital from the banks. It is too expensive at the moment. So open your eyes. Let us not become a victim of high interest rates, but let's see how we can actually use this as an opportunity. So take care of yourself on the consumption side, manage your expenses, pay your loans quickly, but on the flip side, see what opportunities are available to you, even if it's just putting your money in a fixed deposit. Watch out for these and other vlogs next week. Next week, I talk about more about the environment, but more so how we are using this to blame other things for things that we should have handled ourselves. Thank you for watching this vlog. Hope to see you next week. Please do subscribe to our YouTube channel to keep getting this and more updates. Thank you.